There's no other word for it. Iron ore is booming right now, overtaking its previous peak from 2011, 10 years ago. The price was just short of $194 a tonne on Wednesday.
So what we've seen is the iron ore price has really surged, and we've seen prices hit record highs earlier this week. What's driven it is underlying demand in China, which is incredibly strong. Just to understand how strong it is that steel prices have lifted to such an extent that steel margins for mills in China are high enough to be able to absorb not only the high iron ore price, but high coking coal prices.
Compare $194 a tonne with the government's budget forecast last year of $55. It's not just shareholders in BHP, Rio Tinto and Fortescue who are raking in the cash.
We're talking 1.5 to 2 billion. So in the scheme of things, it actually will contribute quite a portion.
China's property sector uses about 30% of the steel produced by its mills. Infrastructure projects take about 25%, and that's expected to keep rising. Demand is high, but global supply is constrained.
Steel production in China remains at record levels, with output of 271 million tonnes in the first quarter of calendar year 2021, and that's an increase of 15.6% from last year's COVID-impacted levels.
Recent bad weather in the Pilbara has reduced Rio Tinto's shipments to China, but the main factor is Brazil. Brazilian miner Vale is continuing to have reduced production levels after a tailings dam collapsed in 2019. The mining disaster killed 270 people.
In January 2019, when we saw the dam collapse at Vale's Fayal mine, what it meant was production, which Vale was targeting at around 400 million tonnes, fell to about 300 million tonnes, which it has stayed at for the last 2 years. Now, Vale is only going to get back to those pre-dam disaster levels by early 2023, and the risk is that it takes longer than that.
Fortescue Metals had a strong March quarter and is on track for a record year.
Demand for Fortescue's products remains robust. We achieved average revenue of $143 a dry metric tonne for the quarter, and that's an increase of 17% over the previous quarter, and a realisation of 86% of the average Platts 62 index.
Iron ore exploration company Magnetite Mines is based in South Australia. Its Razorback project has almost 4 billion tonnes of iron ore.
We've been working on the Razorback resource for quite some time, so this is not something that we haven't suddenly started work in the last few weeks as iron ore prices have picked up. But nevertheless, this certainly gives a lot of momentum and gives us the opportunity to accelerate our work programs. And so we really think there's a particular opportunity for South Australia and for Magnetite Mines to get into the market with a sensibly sized, capital-efficient project producing high-grade products.
The project site is about 240 kilometres from Adelaide, close to a railway line and iron ore ports.
The pre-feasibility is due out by the end of the first half of this year. Then we'll go into feasibility, which will take of the order of a year, and at the end of that we'll be making our decision to mine. And we expect first ore on ship to be, at this stage, our schedules are saying late in 2024. So that's the timeline we're working to.
So with demand high and new projects in the mix, where does the price go from here?
We think prices will hold steady and slowly and gradually come off. But it's certainly been higher than what we expected. And it just goes to show that China's steel demand has been as strong as it has.